Okay, in this problem, we're going to go ahead and practice one of the common current liabilities. We're going to do some journal entries for it, and that is sales tax. So you can see in item E, we already talked about in the previous video about sales tax being within the current operating cycle. So that was current liability, and we're going to go ahead and practice with that. So let's go ahead and scroll up here for problem 2. And so we can see here on July 5th, Archer Spy Supplies recorded sales of merchandise inventory on account 55,000, and the sales were subject to a sales tax of 4%. So Archer Spy Supplies is going to collect from the customer not only the 55,000 that they owe, but also they're going to collect the sales tax of 4%. So Archer Spy Supplies, they are just the middleman. So the customer is who really owes the sales tax, but Archer Spy Supplies is going to go ahead and collect that sales tax off of that merchandise that was sold, and then they're going to go ahead and at a later time give the collection of that sales tax at 4% to the state, to the Department of Revenue. And so right now, until they pay it, it'll be a payable. So they're just going to collect the cash on behalf of the customer. They're not collecting it as extra revenue or anything like that. So we can see here we need to do a journal entry to record this transaction on July 5th. So let's go ahead and do that first transaction, and then we'll talk about when the sales tax is paid. So like I said, the customer said, put it on my account, I'll pay you later. So we are going to receive very soon, but not yet, 55,000 from the customer and the 4% for the sales tax. So let's go ahead and do a calculation to find that. You can see I already did that. Oops. Okay, 55,000. I'm going to get rid of my little camera so we have more room for viewing. So let me just do that real quick. There we go. Now we have more room to see things. So we have 55,000, and we're going to multiply that by 0.04 for 4%. And so we can see the sales tax that we need to collect from the customer is 2,200. So we're going to collect 2,200 plus the 55,000 from the customer. Eventually, they said put it on my account, I'll pay it later. So we're going to receive that very soon. So what account is that I'm debiting? Not cash, but accounts receivable. All right, for 57,200. And what was our sale? Well, I said that the sales tax is not part of the business's revenue, only the actual merchandise that was sold for 55,000. So that is my revenue. And then they are just the middleman. They're collecting that. They're going to collect the sales tax, and they're going to turn it around and pay it to the state. And so they Archer Spy Supplies owes to the state sales tax. So that's sales tax payable, and that's for that 2,200. Not too bad. Okay, so there's that. And then we have now on August 15th, Archer pays the sales tax owed to the state from the July 5th transaction. So now the sales tax for 2,200 is going to be paid, turned over. What are they paying with? Cash, right? So we could just say we know our credit is cash. We can work in this reverse manner, and so cash is going down, right? What is going to be our debit? Well, we need to decrease. We no longer owe the state the sales tax because we went ahead and paid them the cash. So we're going to decrease that sales tax payable above there in July 5th, and by that amount of 2,200. And so there we go. There's our journal entries. Not too bad. Very, very short video, another 4-minute video. We're going to do one more problem together, and then you should be good for current liabilities.